This is our Forex currency block for June 28th, 2011. And like most days, we really want to buy the strongest pairs versus the weakest. Some days the market shows some strength, and then there's weakness, and then strength, and then weakness. Whenever that's the case, you're always better off trying to trade in the direction of the longer term trend. The euro, for instance, the longer term trend is up, and had some strength followed by 3 hours of weakness. A little bit of strength right here with no weakness. It's pretty safe to assume that the longer term trend will continue. And around 8:30, look to buy the euro against one of the weaker ones. Coming up to 8:30, the dollar had consistent strength or weakness. The monthly trend is down, the weekly trend slightly up. It never had consistent strength or weakness all day. Strong. Usually when the euro is strong, the dollar is weak. So you could have looked to buy that. The yen was more consistently weak. The peaks were greatly weaker than the peaks of up strength. So a safer trade at 8:30 would have been to look to buy the euro yen. Here's 8:30. You can see this price has been chopping around. It spent a little bit of the morning above the hourly and then went underneath it. Really barely even broke the hourly moving average. Usually when price breaks from below to above the hourly, it shoots up 20 to 30 pips, or in the euro yen's case 50 pips. One of my Fibonacci areas acted as support, never broke down. So coming up to 8:30 with the longer term trend is up, and there had very little weakness right here. This breakout right here is very high probability. This resistance area got hit last night, got hit again here, and usually the third time any kind of sell area gets hit, price will go through it. So you get in and rode this trend up. You can also add our FX stop script, and this intelligently trails the stop. And if you bought that breakout, notice how it kept you in all the way up here to the high, right? 116.07. You're in this trade right here at 50 and made about 57 pips. It's a phenomenal way of keeping you in the trend. And notice, it went long right here, and then the market went sideways. You can either, use this as an entry method, or if the trailing stop is showing you that the market is more likely to go up, then you might just buy this little wedge pattern right here and get in this trade a little bit early here at 40 versus 50, 10 pips early, and then when it takes off, you're already up another 10 pips. You might have exited half your trade here, and the rest when it got, the trailing stop got hit. The CAD, very weak today, starting off until about maybe 8. So you could have traded this against one of the stronger ones. The Swiss, the longer term trend was up, and it had brief amounts of strength, and for most of the time the peaks of the strength were more than the weakness. So looking to sell the weak CAD against the Swiss made sense, especially since that's the direction of the longer term trend is down. When it breaks underneath the hourly without that much momentum, usually it comes and retests it here. That's a good place to go short. When it had another false breakout here, good place to go short. And anytime you see a lower low, usually you can sell the next counter trend move up. You get short here, stops right above the highs here, and it goes down to our lower band and kind of runs out of steam. Comes up again here. I'd be a little bit nervous in selling this here because it did make a higher high than before. So when it kind of goes down and double bottoms right here, you're out. But this trend was down until the CAD lost its weakness, which seemed to happen around 11. Today was a tougher day than normal. The yen, pretty much was weak from 7:30 until now, and so you can trade the yen against some of the stronger ones. I would avoid the CAD because the longer term trend's down. Same thing with the pound. But the euro makes sense because the trend is up on all time frames, and you had about a 3 or 4 hour downtrend in the euro, even though the longer term trend's up. And this is your first sign that's likely to reverse, like I said. So the euro yen made sense. The Swiss has a longer term trend that's up, and for the most part, the peaks of the momentum were to the upside. And same thing with the Australian. So buying the Swiss yen after around 8 made sense. And so did buying the, hold on a second, Swiss yen. Notice just a nice smooth uptrend. If we put the FX IntelliStop on here, you will see that it does a phenomenal job of keeping you in the trend. Coming up to 8, you might have bought this breakout right here. You're in this trade at 97.08, and it looks like the trailing stop got you out here with about 20 pips. When it gets to the upper containment band, most of the time that's the end of the move. So, if you wanted to exit at a very high probability area a little bit before the pullback, that makes sense. Remember, the Australian was strong today as well, and notice how this was above the hourly and broke out. The trailing stop still has you in this trade. You're still in it. You're long this around 84.60. You're up almost 80 pips right now, and the trailing stop has not gotten hit yet, and it's very tight. So you're still in this trade. You're up 80 pips. It is above the upper containment band. It's probably pretty likely within the next half hour to come down and stop you out. FX IntelliStop is a very intelligent stop, which also is very tight to the market. If the market is super strong, if the Australian is super strong and the yen super weak, like is the case, we have a wide enough stop not to get you out. But when the market is up statistically too much, above the upper containment bands, above the 4-hour statistical highs and lows, then we intelligently tighten the stop even more and try to get you every last pip possible.